the key stock and crypto channel.
And we have Walmart officially enters into the Metaverse, teaming up with Roblox and targeting younger shoppers. And guys, we know it's all about Generation Z, re-educating them for the fourth industrial revolution. This new digital economy is going to be all that they know. And we know the Metaverse is nothing but a marketing ploy, but the virtual world is definitely going to become reality. Now, as the Fed is raising rates and shrinking balance sheets, and central banks are all doing the same, we have chaos in the fiat currencies. We have Morgan Stanley sees the dollar surge, setting the stage for something to break. And we know the emerging markets are taking a hit, and it's going to force them over to cryptocurrency, stable coins, central bank digital currencies. And then also we have the Bank of England says it won't hesitate to keep raising rates after the pound falls to historic lows. And we see these fiat currencies dying, but we know it's all part of the plan. Now we have some members of Congress have above average investing returns. So we have 2 new ETFs that will let you follow along right with them. And this is definitely a sign. If you needed a sign, this should be one to let you know that this system is definitely going to be ending, because we would have never heard a thing like that, and I would never trust it anyway. Now, as the stock market pulled down again today, we had Wynn Resorts moving up. We have the casinos now back open. We have sports fully back. And what comes with that? That's right, guys, betting. And as this economy starts tanking, people look at ways to make money, and we know people love that easy money, and that's the reason why we're going to see these betting stocks move up. Now, guys, we also have Netflix to open video game studio in Finland. And don't forget about the partnership they made with Microsoft. We know they're going to be pushing ads, but just imagine, Microsoft brings in the games, brings in the virtual reality, and now your house becomes the Metaverse. And lastly, guys, we go over the actual indicators. We had yields up, which are crushing the market. We have the dollar as strong as it's ever been, and we know it's crushing the emerging markets. And we know eventually they're going to start getting off the dollar, which is going to cause a global collapse. But we know the solution: the digital economy, cryptocurrencies. And then, of course, guys, we had the VIX higher. The VIX is always going to let you know when volatility is right around the corner. But, guys, all I have for you. Have a great day.
Give a type of money that can only be spent for a specific number of reasons. And some worry about that state control or whatever. But like in this particular narrow use case, you want to give checks to individuals to get the economy moving again. Yeah. So if you think of programmable money that expires if you don't spend it, because we just stick.
We focus on digital currencies for a couple decades. Digital currencies for couple decades. This is something we've been focused on, digital currencies for a couple decades.
Dan, great to speak with you. Overall, it sounds like you're negative the markets, but you think maybe a bear market rally is upon us soon?
Yeah, I tweeted that out on Friday. I mean, if you look back at our Twitter account, several times during this year, we pointed out when we thought the next bear market rally would start. But we pointed out we think the S&P ultimately goes down to 3,000. We've been saying that since May. We started the year thinking the market would be down 20%, revised it to down 30 to 50 with 3,000 as our estimate. But you get these bear market rallies along the way, and over 70% of our technical indicators was flashing oversold when the market was down about 2.4% on Friday. So we try to stay disciplined, even though, Mondays you get big crashes a lot of times following bad weeks, bad closes, but you should expect that. And so covered our shorts today. We'll probably add to our longs. We're still sitting over 50% of the portfolio in cash. That'll become less over time. And, we came into this year saying we thought cash would be one of the best investments for retail investors unless they could trade their portfolio daily. That's still our belief.
Right. So when you position for that rally, Dan, what would you be deploying money to?
So I think you want to pick sectors where the fundamentals are strong, and there's very few of those. So We started nibbling on the energy sector again on Friday. The defensive areas, so Walmart, if you go back to 2008, people shop at Walmart when you enter a recession. The stock was up 18% in 2008. The S&P was down 38%. You know, healthcare, people want to live. So healthcare is a good defensive area. So that's another good space. We actually, if you want to get more aggressive, we like the online sports betting space. So DraftKings, we bought some Penn National on Friday, actually, as a land-based casino, but has a good online sports betting presence as well. So you can there are sectors to look, but you got to be willing to trade it daily. Our view is you get a decent bounce, then you put your shorts back on. That's kind of how we're playing this right now. And we're looking for our shorts to make us money between now and mid next year when the market ultimately bottoms, not our longs. I mean, that's why we're up for the year. It's not our longs, it's our short that makes us money.
So, I mean, bear market rallies are also opportunities to sell, whether it be shorting or selling positions. And so I'm wondering how you look at that and what you would be poised to short and or sell.
Yeah, no, it's a great point, Melissa. So it's the same stuff we've been negative on all year. So during COVID, people ran out and bought smartphones, they ran out and bought PCs. So everything that benefited from COVID, that's the stuff you want to reshort. We think people are going to take down smartphone estimates for the year, more focused on the low to mid end, but we worry about the high end as we get towards Christmas. Same thing with the PC sector. Enterprise software, we think, is the new thing that's going to have a big problem as we enter next year, because everybody goes on the internet. All the businesses go on during COVID. Now people are going out and doing things in a physical manner. You're going to need less software licenses, enterprise licenses next year. You've got Google, Facebook, Amazon, all can't hire enough people at the beginning of last year. Now they're all freezing or laying off people. That's going to ultimately go back into the enterprise hardware names as well. And finally, internet advertising. Don't forget, you've got Disney and Netflix both launching ad-supported tiers coming up. That's going to take away money from other internet advertising-led companies. So those are two new areas we're looking to put our shorts back on, or again, put them on, as hopefully the market rallies over the course of this next week.